I went with Electro Optics System, EOS, because defense has just been such a strong thematic. And EOS has had a major contract win, securing an order valued at $125 million from a NATO nation state. This is the world's first order for a 100 kilowatt laser defense system. The drone defense system is based on a new type of high-powered laser developed, it's my understanding, by EOS. And it says that the system allows for defense against drone swarming attacks at an economical cost, whatever that means. Aurizon is calling it a defining moment for the company, saying it not only improves its credentials globally as a supplier of high-energy laser tech, but also raises its conviction in the company converting its $1.3 to $1.5 billion opportunity pipeline into contracted revenue. Just yesterday, EOS had its price target lifted by Canaccord Genuity and Bell Potter to $3.30 and $3.75 per share respectively, and we had that share price up, putting on close to 33% today. So let's get a view from my expert guest, Michael Wayne. Have you been on the defense bandwagon?
Not really, to be honest. It's something we probably should have had more exposure to, but they have run quite hard in a lot of cases. In the case of EOS, this is a business that I recall going back 5, even 10 years. Was always talked a big game, but was very sort of low on results. At one point they were there talking about shooting space dust out of space with lasers, but over time it looks like they've done a very good job in refining their focus and developed some technology which has become appealing to a lot of the defence communities around the world. So there's no doubt this contract on paper looks very, very good. I'm sometimes a little bit wary of some of these grand contract announcements because in reality you still have to deliver on them, and we don't really get too much in way of the terms of these contracts over what time frame. Is the revenue going to be received all at once? To get that contract accounting disconnect between booking the revenue and cash flow coming through the door. But it's hard to be negative on it. It's without doubt an example of this business moving into a more mature direction and starting to sort of justify some of the valuations that it's been trading on. Am I game enough to go buy from here? Potentially in the short term, the momentum keeps running, particularly if they can ram home another contract or two. They have been spending a lot or investing a lot in marketing and trying to spread the word, so to speak. So this could be the start of something pretty spectacular if they can keep on delivering those contracts. But it is still a higher risk proposition. So for me, I'm just going to go a hold.
Mm-hmm. So if you're in it, ride that momentum, but difficult to put new money in now? Or is Michael being a little bit too cautious when it comes to this strong thematic?
I don't think Michael and I would disagree on a few things. I'm not quite going to disagree, but I would call this an aggressive buy. Okay, I like to have the word aggressive beforehand. This is a game-changing contract on paper. I think you said 125 million with the currency conversion, 71.4 million euro. Last year's revenue was only 177 million. So you're talking about a massive change here for a company in a hot space. And it's very important to bear that in mind. This is a very, very hot space. At Market Matters, we have a Q&A every Saturday morning, and it has been dominated this year by Droneshield.
Yeah.
Absolutely dominated. I might have mentioned that before on the show. And here we are, defence again. And you look at the defence space across the European markets in particular, and it's gone crazy. But money is going into this area at the moment. You ride the wave, and you'd be very, very prepared to get off when it stops. We saw that with data centres. The higher the data centres go, the faster they'll come back. It doesn't mean that data centres aren't here to stay. It doesn't mean that data centre companies won't make an awful lot of money in the next decade, but it means they become more and more volatile. So when you buy stocks like this, you have to be very prepared that if it can go up 30% plus in one day, it can fall 15% in one day. So if you put too much money in, too much money to work, you've got to take a deep breath and say, okay, I can lose 20% tomorrow. This is the nature of the beast. So I'm going to call it an aggressive buy. I like the direction they're going. I'd rather they've got 3 contracts of equal size rather than just one big contract. But generally, once a company, we've seen this with Droneshield, once a company starts to get contracts, other companies give it the credibility and say, okay, they're real, they're getting that contract off XYZ. I'm happy to look at them a bit more seriously. So I think I've got to call it an aggressive buy, but be prepared, it's aggressive buy.
Got it. And we will be speaking with the CEO today at 3:50 p.m. If you're listening to this podcast form or watching after the fact, you'll be able to find that interview online. So that was EOS, a hold and an aggressive buy.